Last week, the National Reverse Mortgage Lenders Association's annual meeting in Expo was notable for many reasons, one being the announcement of a major change in the association's management and leadership. During last Tuesday's NRMLA business meeting and special awards session, it was announced that NRMLA CEO Peter Bell will retire from the association effective September 30th. Bell will continue advocating, however, for affordable housing issues. NRMLA will be separating from Bell's association management company, Doorbell Inc., as part of the transition and will continue operating independently, writes Housing Wire. After 28 years of representing the reverse mortgage industry and being engaged in all aspects of the industry's issues, I decided to step down from being CEO to focus my own time on the other side of my business, which is the affordable housing industry, Bell told Reverse Mortgage Daily in San Diego. I've only been in the reverse mortgage industry for 28 years, but I've been in the affordable housing industry for 48 years, and I felt it was time for me to make that the center of my focus during my remaining working years, said Bell. During the association's business meeting, Bell was recognized with a Distinguished Service Award for his key role in founding and serving NRMLA. Other Distinguished Service Awards were given to Scott Norman, who served in NRMLA in various capacities over the years, most recently as co-chair of its board of directors. 70% of American couples will have one individual requiring long-term care. The burden of long-term care expenses can be mitigated with a long-term care insurance policy or even an FHA home equity conversion mortgage. But what's often overlooked is the impact when one spouse must quit working to care for their partner. Business Insider reports that Robert Papilia, 74, had to retire earlier than he had planned after his wife Marie, 71, started getting sicker. After working more than 30 years at a telephone company, he retired at age 60, 5 years earlier than he had planned, to care for her. The couple, who now live in Burlington, New Jersey, have struggled financially over several years. Although they did bring in about $5,000 a month in retirement income, pre-tax, much of that is now going toward medical bills, high property taxes, and costly homeowners insurance payments. They're left with little at the end of each month, though Papilia said that they were not in dire financial straits. Do we have money in the bank? Yes. Is it a lot of money? No. Papilia told Business Insider preparing to retire comfortably is challenging enough. Preparing for an unexpected health emergency and the resulting financial shock, well, it's quite another. Business Insider notes that Americans are increasingly relying on Social Security and other retirement income to get by. High medical expenses could throw years of retirement planning completely out of balance. Papilia did have a goal to retire in 2015, originally at age 65, so he could collect Social Security benefits and have enough saved so that money would not be a huge issue. In 2010, however, he retired to care for his ailing wife, retiring to care for her full time, and the buyout from his company lasted till 2014. Though they had stayed afloat, some months were particularly tight, and he said it's only a matter of time before something went wrong with the house, which could drive them into financial ruin. Papilia added that their finances were so constrained that they eventually took out a reverse mortgage. And these stories should remind reverse mortgage professionals of the value of younger retirees getting a HECM early in their retirement and then leaving the line of credit intact to grow to cover future healthcare expenses. According to the Maine Wire, a media outlet in the state of Maine, during discussions about recent property tax increases at a South Portland City Council meeting last month, Mayor Misha Pride suggested that elderly residents who are living on a fixed income may want to consider getting a reverse mortgage on their home to help manage their growing property tax burden.
And it's really unfortunate. I'm really sad, and my taxes are going up too, and have every year for the last 5 years. Seeing as our property values are so high, seniors may want to consider a reverse mortgage. It's I know it's an ugly word, but I'm just saying, I know it's horrible, but it's sort of a last resort.
At the Tuesday, August 13th meeting, the City Council was discussing a proposal to allocate an additional $50,000 to the city's Senior Property Tax Relief Fund. That in response to a shift of the tax burden from South Portland's commercial properties to residential ones, and that has caused the city's most recent revaluation. The fund, which was launched in 2011 and it was designed to help provide financial relief to qualifying seniors, has undergone several amendments over the years. According to South Portland's tax assessor Brent Martin, the age for eligibility has been decreased from 70 to 65, and also the maximum relief amount per household has increased from $300 to $500. However, actual benefits are now being prorated based on available funds and the number of applicants, with the average benefit in 2024 being just $258, said Martin in a memo to the city. Portland Mayor Misha Pride has described this as a perfect storm, which has caused a spike in property taxes for homeowners. Thank you for joining us for this week's episode of HECMWorld Weekly. You can also listen to this podcast on Apple Music, Spotify, and Podbean. Don't forget, we do have HECMWorld.com where you can find all the latest breaking news, commentary, and analysis related to reverse mortgage lending for you, the mortgage professional. Thanks for stopping by, and we'll see you here next week for more reverse mortgage news for you, the mortgage professional.